Good morning. It's Tuesday, November 25th. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So I will be traveling here today, so I'll be out of pocket here about mid-morning for a few hours. If you need anything, you reach out. It'll overflow to the trade desk and to the team back at the home base here, and they'll be able to help you out with anything that you need. Now, looking at these markets here overnight, gold futures, they did surge 2% here on Monday with some follow-through in the overnight session on the increased likelihood and confidence that the U.S. will cut interest rates next month. The jump on Monday was fueled by comments from Federal Reserve Governor Christopher Waller, who advocated a rate cut in December due to the soft U.S. labor market. So we had this 6-week government shutdown that was longest in history, and it delayed the release of a lot of key data, making the remarks from the central bankers one of the clues that traders are really looking at here on predicting the Fed's next move on interest rates. So New York Fed President John Williams said on Friday, and this is what really got things, it turned that sentiment around on Friday. That's where you saw some short covering take place here and some repositioning in the markets as the Russell 2000 started to really accelerate higher on Friday. And then you get the 1-2 punch with President Trump issuing a statement saying that perhaps NVIDIA would be able to sell some of those chips over to China here, some of those larger CPUs, and that's where things really took off. And then we get this follow through with more Fed speakers coming out and saying the same thing with the promising hopes of an interest rate cut. So traders will be watching some of the delayed economic data releases that came out this week. We do have retail sales, producer price numbers for September, and the weekly jobless claims due out later today. So any accompanying comments from Fed officials is likely to be among the latest before we get this external blackout period here beginning November 29th. So if we have any more Fed officials talking, we're really going to want to take those clues here and really do a checklist on which ones are looking at the possibility of a rate cut, who are the doves, who are the hawks, and who's neutral. So we got gold up about 55% this year, on track for its best annual performance since 1979. So it's the central bank buying, it's those inflows into the ETFs, and then it's the momentum behind those interest rate cuts that are really driving the prices higher. So you look at some key levels for February, and it's going to be 40, 45, 30. That's your 50-day moving average. Below that's 40, 32, 80. That's a Tuesday, November 18th overnight lows, and then 40, 27, 30. That's your key trend support. So you look at February gold in the overnight session up $34.80 at 41.6550. The high of the overnight session was 41.89, and the low is at 41.43. So kind of in the middle of the road here as far as where we're trading at. You look at the silver market, some of those key levels on March, that 50-day at 48.92. Below that's going to be your trend support at 48.80, and then 48.71. That's the Friday, November 21st low. So you look at where futures are at. They're at 51.44. Low was 51.08. High was 52.18. Futures really took off once that market reopened on the overnight session yesterday. It kind of jumped higher, consolidated for a bit, shot up quite a bit before pulling back. Now the volume will be a little bit lighter and kind of trickle off into the end of this week here before picking really back up. A lot of people jumped in on that copper market, which surged significantly here in the overnight session, up about 1.5%. You do have silver up about 1%, but it was copper with a lot of people going over and trying to take advantage of the start of that type of seasonal. Now, it's not to say that seasonal tendencies don't continue to happen in the futures, because past performance is not indicative of future results, but it's just one tool in the toolbox that we do like to look at. Now, you go to the equity markets, we do got a bit of red on the screen here with a bit of caution is returning after the index posted some huge gains on Monday. It's the AI competition, though. It's heating up, which is actually great because I think it broadens out some of the exposure here. You don't want everything just hinging on NVIDIA here. So we're seeing NVIDIA drop in the pre-market on this report that Meta is in talks to use Google's AI chips. So you get some equity insights here. You look at the agreement, could see Meta use those Google chips known as TPUs here in the data centers in 2027. So the information reported could help establish TPUs as an alternative to the NVIDIA chips. So you look at the market cap and the weighting, because if they're just going from NVIDIA to Google, which is blowing up overnight, why are the indexes down? Why is the NASDAQ down 75 points? Well, NVIDIA, you know, you look at they make up about 10.4% of the NASDAQ. And then you go to Google, it makes up about 6.9%. So you're going to have this shift in this rotation between the two. And Google has really taken off here, especially since that announcement that Berkshire Hathaway took a huge stake in it. Now you look at some of the earnings here. You got Alibaba rose about 3% 3% here after its stock in the second quarter revenues beat estimates. And then you look at the economic data. We've got a number of September data releases expected at 7:30 a.m. Central Time. Retail sales, PPI, followed by consumer confidence, Richmond Fed Manufacturing Index for November, and pending home sales for October at 9 a.m. Now, this is what has really driven this market, and specifically like the gold market, the Russell. We've talked about bonds and interest rates. With rates coming back down here, and a lot of clients had position in that 10-year note. So markets are now anticipating an 80.7% likelihood that the Fed will cut rates by 25 basis points at that December meeting. That's up from about 19% here just a week ago. I'm sorry, that's probably inaccurate here. So 1 week ago, let's look and see what that was. So 1 week ago for this meeting, we've got it at 50% chance. So it's jumped up from 50 to 80% chance. So you go to the January meeting, 63% chance they cut 25 basis points. Another 23% that will be down 50 basis points from here. So although the timing has been uncertain, this is what I keep telling people, it's a direction that's clear that rates should be heading lower here. And we're not in this environment where we're in this position where we're raising rates and rising inflation and hawkish Fed and things like that. So it's come the opposite course. So you got the dollar index sitting at 100. You got the euro currency at 115.39. Now, the euro has been a market that we've been attacking the downside, and it's really, you look at their largest economy, German business morale, it unexpectedly fell in November. It's a survey that showed on Monday, and companies are really losing hopes on the recovery in the German economy, which has been just in 2 years of just contraction. And you look at the euro, it makes up 57.6% of the basket, the basket index in the dollar. So you get a 10-year treasury yields down at 4.04%. That was a big decline Friday and Monday with big sell-offs here. So 10-year futures sitting up at 113.14, just about a tick off the high. You go over to the DEES VIX here. VIX down at 2007, so big collapse here. So the S&P 500, it's back on this edge where you look at the way the dealers are positioning and the option dealers, and they're back to like a neutral gamma. So what they're doing is they're able to manage their delta exposure with minimal rebalancing at the moment. So it's not going to amplify the selling or amplify the buying on the markets one way or the other here. You get Bitcoin future pulling back a little bit after pushing back up close to that 90,000, sitting at about 87,400 before declining. You go to the global markets, European stocks were muted. Asian stocks, they rose because of that repositioning with the artificial intelligence here. And then you get the MSCI Asia Pacific Index up just about under 1%. You look at the ETF flows. So those haven't been really doing much changes here in the gold to silver market. So gold up about 17%. They cut about 14,000 troy ounces of gold. Total gold held by ETFs up 17% this year. And then you go to silver, they added about 169,000, so it's up 15% year to date. The gold silver ratio sits at 81-1. So if you guys got any questions, you want to open up a futures trading account, I had a couple people reach out to me yesterday here. I'll get back to you here today. Here it was really kind of chaotic when you've got an 18-month-old, you're trying to travel, things like that. So got a lot going on here. You got a dog, you got a board, you got all kinds of stuff going on. So you guys don't want to hear that. You want to know where the markets are going, where they're heading, and where I think they're going to go. So you guys got any questions? Have a great Thanksgiving. I'll try and do a video here throughout the week. Remember, futures and option trading does involve risk of loss. May not be suitable to all investors. Good luck. Go get them.